Hello, everyone. First of all, Happy New Year 2025. I know that I've been away from the channel for a while. I took a break in December. If you don't know me, if you're new here, I've been making videos about how I invest and sharing my investment journey in public. So essentially building my portfolio and sharing it with everyone here. Towards the end of December, I had an amazing, refreshing experience. So I ended the year with a detox program, a yoga course, and a beach resort retreat. It was an amazing way to end the year. I had totally forgotten about my portfolio and my even my YouTube channel, my work. It's very good to be back though, but at the same time, it helps to look at things from a fresh perspective, which is why I wanted to share my new investment strategy for 2025. And honestly, I think 70 to 80% of the investment strategy is always going to be the same, which is because I'm in the long term investing game. But there are a few changes that I've made, and that's what I wanted to update on. So before we get into that, let's look at the current portfolio and how it's structured so that you're able to compare, especially if you're new here, you're able to compare how we are going to do the new investment portfolio versus the old one and how we will balance this out. Most of the money, as you can see, if we sort this by the present value, is going to be in the index. So we have mid cap 150 ETF, we have the next 50 ETF, we have the Nifty 50 ETF, right? Those are the top three. Uh, that's the main concentration. And then we have, if you look at the top five, we also have a small cap mutual fund, and then we have the NASDAQ 100. So these are the areas where I've made most of the changes for 2025. The top three are likely going to be the same for now. When it comes to the small cap, I'm going to start investing in the small cap index. So I've made this decision after looking at the performance, comparing the performance. We all know that for large cap and for mid cap, the index is hard to beat, right? So you get all of these fund houses pitching you new schemes and so forth, but very few of them beat the index, and that too very inconsistently. So if you look at consistent long-term performance, the index is the best option. The low expense ratio combined with the fact that all of these fund houses are not able to beat the index makes it very attractive for me to just go to the index. Now, like I've said before, you could choose an index fund or you could choose an ETF, and both those approaches are perfect. In my case, I've chosen a combination of both, but mostly I'm transitioning more and more to the ETF game versus the index fund game as my portfolio evolves. There's no specific reason, to be honest. In fact, for most people, I feel an index fund could be a much better option than an ETF. So go ahead with an index fund. Don't think of like this is the YouTube video, this is how I need to invest. Instead, think of this is just a reference of someone's journey, and then I need to make my own decision of how I should invest, right? Whether you invest in the index or the ETF, we are both investing in the 150 companies that have mid cap. Then we have the 50 companies that are large cap, and the next 50, which are also large cap after the 50 top 50. So the 51 to 100 companies. The money is going in the same companies, is what I'm trying to say. So the major changes that have happened is let me open my plan now for 2025. I'll replace the small cap mutual fund with the small cap index, and I'll take you through which index I've chosen. But that's one big change. The top three stay the same. The split I've slightly adjusted. So it's going to be 20% in the Nifty 50, 20% in next 50, 20% in mid cap 150. So imagine I've got 100 rupees to invest. I'm going to put 20 rupees here, 20 rupees here, 20 rupees here. Now, the 20 rupees that was going into, in fact, slightly less than 20 rupees that was going into the small cap 250 index, into the mutual fund, the small cap mutual fund will now go into the small cap 250 index. So that's one change that I've made. And the 20% is also a improvement, an increase from the previous percentage that I was investing in small cap, which was much lower. The next, the US index. This is another change that I've made. If you're aware about this, as per the RBI reserve rule, there is a certain amount of threshold that has been hit, because of which there are no new fresh investments that can go into these international funds. I do think that the previous SIPs will continue as such, but I just don't want to bet on India as the place where I want to invest in the US index. So I'll be moving all of this investment from my Singapore company. So instead of investing as a personal entity in India, I'm going to be investing from my Singapore company. So the asset is going to be owned by the Singapore company. So you may see a dip in my portfolio because I'm not going to be covering it in my videos, because that's something that the Singapore company, my company, will own as an asset. So my US money, whatever is invested is invested, but the future investment I've moved, and I've already, been doing this as a process, have moved to my Singapore company. By the way, anyone can start a Singapore company, and I've made videos about this. And I would also put the link to Osome, which is the service provider which I used to incorporate my company. And they also manage my ongoing company operations, with this video description, so that if you want to start a Singapore company, you can. Once you start a Singapore company, you can open a Wise account. So let me show you my Wise account so that I can just quickly take you through my investments. So this is how my Wise account looks. And this is basically the returns that I've generated as of 6th of Jan 2025, just by keeping money into the US index. And like I said, this is an investment or an asset class. This is going to be owned by the company. So this is a good way to also diversify, I feel. So the money is sitting in Singapore and it's invested in the US market. So this is how I'm going to be doing US investing from here on. The next slight change is gold and silver. So I was doing 10% in gold, but now I'll be splitting it 5% in gold and 5% is silver. To be fair, to be honest, it's not that I've never invested in silver, but it was not a very systematic way of doing it. But now every amount that I invest, so if I'm investing 100 rupees, 5 rupees of that, I'll try to push into silver, 5 rupees into gold. Silver has more industrial applications and usage than gold, but gold in India is, continuing to do well. And I think it will continue to do well because of all of the other significance that we have with our culture and gold. So that's how 100 rupees is going to be split. So in this example, you see, if I have to invest 1 lakh rupees, I'm going to put 20,000 into the Nifty 50, 20,000 into the next 50, 20,000 into the mid cap 150. So if you add both of these, that's around 40% into large cap, right? So my portfolio is basically 40% large cap, 20% mid cap, and then 20% is in small cap, as you can see. And then it's going to be 10% in the US. It's going to be 5% in gold, 5% in silver. But if someone was to say, I'm just going to put 100% into Nifty 50, I think in the long run, they'll do well as well. Of course, this is not an investment advice, but this is how I feel about investing. If someone was to say, I'm just going to do 50-50 into Nifty 50 and next 50 for 2025, I think that's a great plan as well. If someone wanted to do a 1/3, 1/3, 1/3 split into Nifty 50, next 50 mid cap, I think that's also a great plan. So there's no right or wrong. There's no prescription here that you need to follow. In fact, I've never said that you need to do this, you need to do that. This is just my system for 2025. I think I've simplified it even more than how it was before. This is my past 2024 system, for example, where I was also doing momentum investing. So investing some amount, which was 2% into the momentum, 2% into mid cap, 2% into silver, more into gold. US was 10%. Small cap mutual fund was supposed to be 20%, but I was almost never investing up to 20%. My mid cap was split between the index and the mutual fund, and now it's just going to be the index. So those are some of the main changes if you have to compare my plan for 2025 versus what I was doing before. What I'm going to do now is, since it's 2025 and, I have saved a little bit of money, I've not been investing that regularly in the past months. What I'm going to do is, as a shagun practice, I'm going to invest 25 lakhs as a way to mark the start of 2025 into this based on this portfolio allocation. So 5 lakhs we're going to put into Nifty 50. 5 lakhs we're going to put into Nifty next 50. 5 lakhs we're going to put into mid cap 150. 5 lakhs into small cap 250. 2.5 lakhs into the US index, which would be handled by the Singapore company, 1.25 lakhs into gold, and 1.25 lakhs into silver. So we're going to invest 25 lakhs into the index to start and celebrate a new year 2025. So what I'm going to do is I'm going to just calculate the amounts that I need to invest from Kite, the amount I need to invest from Coin, and the amount that has to be on Wise. So let's do that quickly. When we go to Kite, we can see that the Nifty 50 index, the next 50 index, and mid cap is on Kite. We also have the gold ETF and the silver ETF on Kite. We're just going to select these. So the total here is 17.5 lakhs, right? So we need 17.5 lakhs on Kite. And then when we talk about the small cap 250 index, this is something that I invest on Coin. And in case you're wondering which one to invest in, I've kept this comparison open for you. So we have Nippon India, Nifty Small Cap 250 Index, we have the Motilal Oswal, and we have the HDFC one, which is slightly newer. So if you look at the comparison between these three, you can see that the AUM is highest for Nippon India. The expense ratio is comparable for all three. Of course, 0.3 is slightly lesser than 0.35, but given that it's a very new index fund, they probably will plan to change the expense ratio over time and come to the peers. So you have to keep that in mind as well, that when they launch, they will have a lower expense ratio. And every 6 months or 1 year, they probably send an email saying, we have updated the expense ratio, and slowly they'll come to the peers. So they might come to 0.34, they might come to 0.35. But if it was as old a fund and comparable expense ratio, then I would have considered it. But since it's very new, the AUM is low and the expense ratio is not very different. And I don't know that they're going to change it probably because HDFC is a established mutual fund house. I'm going to skip HDFC for now. And I'm going to take a call between between Motilal Oswal and Nippon. And just going by the AUM, zero exit load, AUM, I would probably go with Nippon, but I think that there is hardly any difference whether you go for Nippon or for Motilal Oswal in this case, given the metrics that we see on the comparison here. In fact, I've already made a lump sum investment with Nippon to get things rolling. So now we see that for coin, we would need around 5 lakhs. So this is what I usually do when I have to invest. I would just write down, okay, this is how much I need here. This is how much I need here. And then finally, we will invest equivalent of 10 lakhs on Y. So the way I do, I'm so sorry, that's 2.5. 2.5 lakhs on Y. So the total becomes 25 lakhs. So first, let's make the investment of 5 lakhs into the Nippon India Nifty Small Cap 250 Index. And with this index investment, we're going to track the 250 small cap companies of the country. So just going to go ahead, click on buy, select my option, and then put 5 lakhs here. It's at 50,000. Okay, 5 lakhs. So I've just placed the order for the Nippon India Nifty Small Cap 250 Index Fund. And I have also added 17.5 lakhs. So usually what I'll do is once I have the amount inside Kite, I'm just going to start highlighting the ones that I've done. So I've done the US index will be taken care of by my company investment. So let's mark this. The 5 lakhs on coin has been done. Now we have to start investing the 17.5 lakhs on Kite, right? So 5 lakhs, 5 lakhs, 5 lakhs, 5. This is already done on coin. So let's do the first 5 lakhs each, very straightforward. So what we're going to do is we're going to go on the holdings. These are the top 3 instruments. Just going to select add. I also keep these 3 here on the left side. So it's just easy for me to invest. And I could do some calculation to see like how much do I need to invest. But typically what I would do is I would just see an estimate. So it's like 2,000. I could do around 4.75 lakhs, or I could make it, close to 5 lakhs and just select buy. So that's So that's 4.97497,697. So 4.97 lakhs for mid cap 150. So this is going to go and target our 150 companies, which is the company number 101 to the company number 250. We've already taken care of the company from 251 to 500 through this. Like, we are looking at the top 500 companies of the country, but we are giving it amounts which we want so that we can concentrate those amounts in those regions, right? Because a good question here is, someone would ask, why don't you invest in Nifty 500? That's because if I put 25 lakh rupees in Nifty 500, it's going to hit very differently. It's going to hit, a lot of that money is going to go into Nifty 50, much less into next 50, even lesser into the next 150, and then very less into the next 250. It's not going to hit the way that I want it to hit, which is why I'm investing these separately, right? So let's just buy this. So the first one is done. Mid cap 150 is done. Let's go for the second one. So we're going to do 5 lakhs here. So 700 units is around 4.79 lakhs. We could go for 720, 750, like that, but I would usually just round it off. So like 750, 700, 800, it doesn't matter. The next time I could do a little bit more. When the funds are left in Kite, I'll explain what I do. So some funds will be usually left in the Kite funds. And if I'm making another video and after that I see that something is left, I just put them again in the three. So there's some leftover, which I put them back. So let's buy this one as well. And then finally, let's buy Nifty 50. This is going to be, let's do 1900, which is around 5 lakhs. So a little bit more on Nifty 50 is always fine. You could always do a little bit more on Nifty 50, right? It's like the safest bet in the equity ecosystem. Of course, if you look at within the equity risk level, Nifty 50, I feel, is like the safest bet. Then we have gold and silver, which we have to invest 1.5, 1.25, 1.25 lakhs each. I'm just doing a manual calculation for the sake of this video, but usually what I'll do is I'll use my wealth manager on ChatGPT, and what I would do is I would just screenshot this and then ask ChatGPT how many units I need to invest in order to reach this amount. I'll show you that in a moment as well. But basically, what I do is, okay, let me show you that quickly. Just take this screenshot, or you can take this screenshot as well. But essentially, take the screenshot, put it into your wealth manager. Also, take the screenshot and put it into the wealth manager as well. So my calculator is always open. My ChatGPT is always open. Check how many units I need to buy of each to invest 5 lakh each as per the relation, the current price. So usually the assistant will do this job, but I'm not very strict about the exact amounts. I just like playing around with the numbers here and there. But then it can calculate and it can always tell you that, these are the units that you need to buy based on the current amounts. So buy these many units and then you can directly go and place the orders of the respective units. If you want to save time, I have no rush. So this is good enough for me. Gold and silver, 1.25 each. So let's go with gold. It's coming on top of my video. That's around 1.28. Yeah, that's fine. So we're just going to go with this 1700. Again, gold is always good. So now this is like 1.25. Let's do 1400, 1.26. Pretty close. Let's buy this as well. So you'll be able to see these are the orders that we placed, and these are the quantities that we bought. So we've executed these orders, and now we can mark it as done. So I think that's a good way to start 2025 with 25 lakh rupees of investment. But more than the amount, I wanted to show you how I process this. and how you can process this as well. And honestly, it doesn't matter if it 25 lakhs, if it 25,000, if it be 2,500, if it be 25 rupees, which may be a little bit low for the minimum threshold. But if you take 2,500 as an example, I think anyone could do this SIP of 500 rupees into Nifty 50, 500 rupees into next 50, 500 rupees into mid cap 150, 500 into small cap 250. Just remember that it's never going to be the same amount. As you grow in your career and life, your amounts will increase. And hence, with time and with increasing amounts, it's just a long term game where you keep increasing the amounts, you keep having a longer time horizon, and the compounding works in your favor. This is how I play the game of investing. This is how I'm going to play it for 2025. If you watch and understand this video, I hope you have enough takeaways to make your own investment plan for 2025. So that's all for this one. I'll see you in the next one. Bye.